Good afternoon and welcome to this presentation where we go over the results, the financial results of the first quarter on 2023. My name is Birgir Jónsson and I'm the CEO of PLAY Airlines. I'm going to go through the highlights of the quarter. Then Ólafur Þór Jóhannesson, our CFO, is going to take us through the financial results and the numbers. And then I will come back and talk about the outlook and how we see the future and the year ahead developing. Questions are welcome. Please send them to ir@flyplay.com. We will gather them in a document and post them online tomorrow morning so everyone can see all the questions and answers that are sent to us. We are closing this quarter and of course the first quarter in aviation is always quite difficult and quite challenging. It's largely in line with our expectations. Our EBIT loss is more or less as we anticipated. We see, however, many very positive signs in the business, and we will go through that in this presentation. But if we look at how the company basically looked and performed in this quarter, we transported 212,000 passengers. We operated 8 aircraft at the end of the quarter, and we started the quarter and the year with 6 aircraft, and then we grew up to 8 at the end of the quarter, and we will be 10 aircraft now entering the summer season. Achieved 78.4 load factor, which is very acceptable in this season of low demand. Operated between 18 destinations and achieved 85.5 on-time performance, which is a massive achievement for us in winter operations in hub and spoke transatlantic operations in our geographic location. About 30% of our passengers were connecting passengers between the US and Europe. 29% of the passengers were going from Iceland, and 42% of our passengers were coming to Iceland, which is a very positive sign because we had the challenge and the dynamic last year of not being able to achieve this strong position in the two markets. So it's very good to see this dynamic change for the better. As we saw the year start, we saw our sales absolutely transform, and we basically are seeing record sales in these first 3 months of the year. And of course, we are increasing our capacity also, but it's good to see that we're doing it in line with the demand in the market. So we are increasing our capacity and our ask, but it seems to be absolutely well timed with the demand in the market, and that's very good. And these strong sales is a huge factor and contributes to the fact that we are seeing positive cash flow after the quarter, which is a very healthy sign in our business and basically shows how the future sales are developing. Of course, when you compare the load factor on this quarter to last year, you have to bear in mind that it's not absolutely like for like. I mean, if someone still remembers COVID, first quarter last year was very COVID tainted. And we also were not operating our transatlantic network. We still hadn't launched our US network in the first quarter last year. So it's not absolutely like for like, but nonetheless, it's good to see and that we are achieving a very significant growth in our load factor and actually achieving 14 percentage points higher than we did last year. So 78.4% versus 63.8% in the same quarter last year. And of course, we will see the load factor grow throughout this year and as the network really comes online and the demand returns to the market. And I've already mentioned that we're increasing our capacity quite significantly, about 230% from last year. And again, it's a very important and healthy sign that we see our revenue increasing and our unit revenue, our ancillary revenue is also increasing. So we're not stunning the market with added capacity. We're doing it in line with the demand, which is a very healthy sign. One of the things that we take extremely seriously here at PLAY and is also a very good metric to basically measure how the overall flight operation is doing is the punctuality. And we are extremely proud of our on-time performance, and we also feel and we hear from our passengers that this is a very critical thing for them. People are going through to the destinations, they have onward travel, they have connecting flights there, they need to be at the destinations on time, and we pride ourselves on being the airline that offers the best prices in the market, and also is the most punctual airline in our markets. And here we are basically comparing ourselves to our major competitor here in Iceland, and we can see that on every month we are outperforming them and giving our customers the best on-time performance, so we get our customers and our passengers to their destinations on time, and it's very important to us. Another thing which is good to see developing in a positive manner is our share of passengers coming to Iceland. This was one of the things, as I said before, that we were not so successful with last year. And here we can see that in Q1, 9% of tourists that came to Iceland chose PLAY. A very significant growth from what we're seeing in the previous months, and this is going to grow into the summer and into the year as we see the year progress. Also extremely proud of the market share that we have achieved in Iceland, and as you can see here, that 30% of Icelandic people that went abroad in the quarter chose PLAY. And this is a company that is not even 2 years old now. So for us to achieve this very strong market position and market share in our local market is a very good sign and very encouraging for us. It's a sign of trust and confidence from the market, and it's something that we want to build up in the future. And I can look forward to future presentations when I will tell you that these metrics will develop in an even more positive manner. We are also focusing on PR and marketing, and also because we are called PLAY, we're trying to do fun things and things that are good to increase our public profile. And one of the things that we had a lot of fun with in this quarter was awarding and selecting our 1 millionth passenger, which of course was a big milestone for the company. And it took us 20 months from the start of flight operations to get to this 1 million passenger. And as a sign of how quickly the company is developing, we foresee that we will have the 2nd millionth passenger in September. So from the 1st million to the 2nd is going to be 7 months. From the first passenger to the 1st million was 20 months. So it's a massive growth trajectory that the company is on. And the video that we produced and the PR effort and the stunt basically that we did around this raised a lot of awareness in global media, and we got a lot of positive feedback from it. So it was a fun stunt, but also signaled that we are getting very established in the market and seeing some significant passenger numbers. We have on many occasions gone through our fleet plan, and we will have 10 aircraft from this summer, or from May basically. We already have 9 of them now here in Iceland and in operation, and we will have 10 in full operation from the end of May. The 10th is now in final assembly in the Airbus facility in Hamburg, and we will see that here in Iceland at the end of May. So brand new, absolutely specifically tailor-made for our purposes, and absolute workhorses, these aircraft, and perfect for our network and destinations. So this was kind of the overview of what we've been doing in the quarter. We are always hiring people. We need people to drive our aircraft and transport and service our passengers. And we are hiring about 200 people this spring. We did 150 new hires and trainings now in the quarter, and we're extremely proud of the fact that we have people from 23 nationalities now, and are creating and have been successful in creating a culture in the workplace of inclusivity, diversity, and inclusion. We want to make sure that our people feel welcome and they feel safe, because we know that these are the surroundings and this is the culture where people give the best service, they give the best performance, and we are absolutely seeing that in the morale of the company and basically in the spirit of play, that we are creating a really special place here. I'm going to invite Ólafur Þór Jóhannesson, our CFO, to go through our numbers now and the financial results, and then I will come back and talk about the future. Thank you.
Thank you, Birgir. This summary is showing the impacts from the great sales in the beginning of the year, from the increase in the capacity and the ramp-up cost for the summer season. That is resulting in higher revenues than last year, amounting to 32.7 million, negative EBIT by 17.7 million. But despite this negative EBIT, we had positive cash flow amounting to 1.4 million during the quarter. That's very good news for us, and a very healthy cash position of 37.6 million at the end of quarter. As before, we have no external interest-bearing debts. They are zero at our balance sheet, but of course we have to comply with the IFRS 16 regarding the accounting for lease liabilities and the right of use of assets. There was a great step change in revenues from last year. They were 3.4 times higher than in the first quarter of 2022. 32 compared to slightly above 9. We had 6 aircraft in operation during the first 2 months of the quarter and 8 at the end of the quarter. The EBIT was negative by 17.7 million. It is very similar amount that was in fourth quarter of 22. But as Birgir mentioned, our EBIT is in line with our forecast and the internal management forecast for the year, and so we are seeing that that is in line with our targets. We have to bear in mind we have a great ramp-up cost in the quarter in staff cost, maintenance, and depreciation that is affecting the results for the quarter. And to the balance sheet, we had the cash position of 37.6 million, and that was mainly driven by very high sales in the first months and strong forward bookings to the coming quarters. To the income statement, we have slightly better EBITDA result than last year, 7.1 compared to 7.7. We had depreciation twice much as last year, from 5 to 6 to 10 to 6 million. That is, of course, affecting our EBIT results for the period. And also we had higher financial expenses during the period because we had, of course, more aircraft. There's new line in the income statement, fuel hedges. We had a loss of or negative position due to our fuel hedges, amounting to 3 million in total at the quarter end, and we are entering these 2.4 million into the equity and as a liability under these fuel hedges will expire. Then we will transfer it from the equity to the income statement. But of course we are very satisfied with this trend in the oil prices, because the trend will, of course, helping us to reach our targets for the year. But I will come later on to the point of the fuel. Operating income and the trend, we have to bear in mind we had very different mix of passengers, and it is very difficult, therefore, to compare these numbers between years. We have seasonal fluctuations. We started our via operation in second quarter of 22. But the good news is that we are maintaining very similar yields between the fourth quarter of 22, despite low season and significant growth in capacity. And we are also seeing the ancillary part of the total yield rising in recent quarter, as we have mentioned in our previous announcement of this matter. And for the next quarters, we are anticipating higher yields than in similar trends than last year. Operating expenses, as before, the fuel prices, they are total 29.3% of the total expenses during the period. That, of course, yeah, it's declining number, because last year we had this number around 38. We had, as I mentioned before, we had heavy cost related to ramping up for the summer, like the staff maintenance and depreciations. But the good news are we are seeing the CASK decreasing from 9.8 to 6.4 in the first quarter of 23, and we are benefiting from the improved utilization of the company assets, because on average we are utilizing our aircraft 11 hours per day in the first quarter compared to 6 hours in the last year. Total assets, they amount to 435 million and increased by 100 from year-end 22, and it's mainly driven by the new 2 aircraft, around 85. They were added to the balance sheet at the first quarter. We also see the increase in trade and other receivables and deferred income. That is due to the strong sales and the forward booking into the next quarters. And our shareholders' equity is total 18.9 at the end of the quarter. And as mentioned before, we have a very healthy cash position, 37.6 million. During the first quarter, we had positive cash flow from operation amounting to 5.2 million. We made repayments of lease liabilities, total 9.6 million, capital expenditures 4.5, and although these movements are summing up of a positive 1.4 million increase in cash, that is, we are very satisfied with that results for the quarter, and we had a closing balance of 37.6 million in cash. The fuel price have, fortunately, we say, they are declining in recent weeks, as you can see in the charter, and on average, the average price or the current spot Platts price was yesterday 761 million. We have hedged 45% of our estimated consumption in quarter 2 for on an average price 119, and 40% in quarter 3 for average price 922, and in the fourth quarter we have hedged 20% of our estimated consumptions at a price of 850. So that's all from me. And over to you again, Birgir.
Thank you, Ólafur. I'm going to go and talk a little bit about the outlook in the year and how we see the all-important summer progressing. I've already mentioned that we see a very strong booking position and a significant improvement in load factor compared to last year. And here we can see that in Q2 we have 20% higher load factor than last year, 16 percentage points higher in Q3. And again, this is important in the context that we are increasing our capacity in the market. So we are increasing frequencies, destinations, and basically available seat kilometers in line with the demand of the market. And that's a healthy mix and something that you want to see. We're always trying to find some interesting statistics and interesting points to show, let's say, behind the scenes or how the business is tracking. And what we find extremely interesting now is our success in generating incoming traffic from destinations that you would think that are Icelandic outgoing leisure destinations. So this is basically the incoming traffic this year compared to last year from leisure destinations like Barcelona, Prague, Madrid, Lisbon, and Bologna, which at least I would think that these are mostly outgoing destinations, but we are very successful in getting incoming traffic to Iceland from the nationals of these countries. And again, put in context with what happened last summer, we were not so successful in getting this traffic to Iceland, so this is very significant for us. And we anticipate this trend to continue, and the summer is looking quite healthy in this regard. Another thing that we have told the market that we were not so successful at last year, and we have been putting a lot of emphasis on in the last months, is our ancillary revenue. And one of the things that we launched in this quarter, in early February, was these bundles. So our passengers and our customers go into our booking engine and they can buy and select 3 different types of bundles, packages basically, that we pre-packaged seats, bags, and fares and these kind of ancillary products into one price. And that has led to a 25% increase in our ancillary revenue, which is extremely important for us throughout the year, and something that we see as an absolutely critical component for us in order for us to meet our objective of revenue and margin in the year. This was a huge project, took many months to develop, and it's really great to see the benefit being delivered. We're always talking about the height or the increase in the ancillary revenue. It has to be pointed out that the way this works is that most of the seats that are actually sold, for example, in March, are booked as revenue in the summer. So we don't really see this large increase until we basically present the financial results for Q2 and 3 and onwards. So what we're talking about is the future trend based on something that we launched in the quarter. So that has to be kept in mind, because as Ólafur said, we are already seeing an increase in ancillary revenue in Q1, but it's going to be much more significant in Q2 and 3, because then this benefit is really coming into play, because most of our passengers are booking their tickets with 60 to 90 days in advance. So there's a time lag in this development. So this is our destination network in this summer and this year. We will have 37 destinations, US and Europe. We have a more heavy focus on point-to-point than we did last year. We are focusing more on southern Spain and basically leisure destinations, because this is where the market is going. This is where our competitive advantage lies. We have a lower cost base than our competition. We have a very basically the same product, all economy product. So we are focusing on Icelandic travelers going on summer holiday and leisure destinations and tourists coming to Iceland. And then in the winter, we will shift a little bit more towards via traffic. So 13 new destinations this spring, a lot of new and exciting things happening. Amsterdam was a notable addition this quarter, a very important destination for us. We've been in negotiation with Schiphol for a long time. It's really difficult to get slots there, so we were extremely happy when we got allocated the slots for operation, and that's going really well, both for passenger and also for cargo. So a very important cornerstone, I think, in the future in our destinations. First flight to Washington this week, and Toronto in June. Our first destination in Canada, and on and on. So the network is getting bigger and a lot of exciting places to visit. Building from that point, we are making some changes to the network next winter, and investing in the network so we can basically build on our commercial activity and on our brand being better known in these markets. The first thing that we're doing, we're adding more frequency to Copenhagen and London in afternoon, so it makes it a better product for let's say weekend breaks, and gives our customer more flexibility in traveling with us to these destinations. We see great response on our Lisbon destination. We launched it last year as a summer seasonal destination. We are changing that into a year-round service simply because of demand. And again, like I said before, it's not only Icelandic people going to Portugal, it's also Portuguese coming to Iceland, which is very, very good. Athens in Greece is another place that is going really well for us. We had anticipated that to be and designed that to be a summer seasonal place, but because of demand and success, we are extending that at least until the end of this year or until January next year, basically. Always putting more capacity into Tenerife and Alicante. Icelandic people don't seem to get enough of those places for good reason. We have some new destinations still to be announced for next winter in Southern Europe, so keep posted for that. We are seeing good results and great success in our ski product. Salzburg was launched last year. Geneva was this year, and we have one more destination that we will announce for next winter. So we're always trying to basically invest in our network and making sure that our passengers and our customers have flexibility and more choice to travel with us. It's an important thing for us to give guidance for the year. It's very difficult to do that in this very volatile business, and also because we are a new company and we are basically a startup company that is finding its feet in the very fast-moving markets. But we still want to give some idea of how we see the future developing. In this context, it's very important to basically put the disclaimer down that this is all subject to external factors. We have oil prices, we have macroeconomic issues, we have all kinds of things, but this is the best estimate that we can give now based on current situation. So this strange red line shows the cumulative EBIT throughout the year, and it basically gives a good feeling of how profits and financial results develop in aviation in this part of the world. So you have losses, EBIT losses, like we've said in Q1. We have dramatically lower losses actually in quarter 2, but still some losses in quarter 2 as we see it now. Then we see quarter 3 delivering some positive results. Quarter 4 is more negative, but nonetheless ending the year with a positive EBIT result. And we give ourselves these kind of basics or the framework around this forecast. We are on track to deliver $280 to $320 million in revenue this year, which is quite significant within the Icelandic, I would say, business environment. We are increasing our available seat kilometers or capacity by by 100% or between years, which is very significant. We foresee to transport between 1.5 and 1.7 million passengers this year. And at this moment, do not foresee anything else than we will see positive developments in load factor and yields like we have been reporting in the last few months. We are allowing ourselves the assumption that we will see stable oil prices, and of course it would not be worse to see them declining even more. And we have a laser focus on our cost base of keeping our target of 3.5 to 3.7 US cents per kilometer. The CASK is higher in quarter one, but that's because the quarter is there's a mismatch between cost and revenue in that quarter. But overall in the year, we see that we are within our target. So this is basically how we see the year progressing. That we will end the year with a positive EBIT result. So something to take away from this: we see positive cash flow in quarter one, which is extremely good for us, and I would say a great achievement for a new company in a very challenging business environment. Gives us a healthy cash position and allows us to enjoy very strong booking flow into the future and into the all-important summer months. The Q1 results, EBIT results, was in line with our forecast, and like I just went over, it doesn't really change our view of the year at all. We see most of our KPIs and our metrics trending in a positive manner, despite the fact that we are scaling the company very dramatically up. So we seem to be doing that with the right rhythm, let's say, and we will continue to invest in our network with new destinations and new frequency, and basically tailor making and making sure that we are always in line with the market dynamics with our offerings and with our network. Again, questions, please send them to ir@flyplay.com. They will be posted, questions and answers, on our website tomorrow morning, simply to keep it on the record that there was a question and there was an answer, and that for all eternity it's there to be saved and enjoyed. Thank you very much, and I look forward to meeting you again and talking to you again when we present the quarter two results this summer. Thank you.